The Bank of Canada just announced their most recent interest rate hike. And this time they said that they're actually going to pause interest rate hikes moving forward. So is that actually going to happen? And what does that mean for you if you're looking to buy, if you're looking to sell, or if you just have a mortgage to pay off? I'm going to break that down in this video. What's going on, guys? Welcome back to the channel. My name is Demetres Giannitsos with eXp Realty. I'm a realtor here in the GTA, and I make educational and hopefully entertaining videos around the real estate space. If you are looking to get in touch with me regarding buying, selling, or just want to chat about the market, I've left a link down in the description where you can book a one-on-one call with me. So yesterday, the Bank of Canada increased the interest rates for the 8th consecutive time, raising the key rate from 4.25% to 4.5%. So we saw a 0.25% increase. And this is actually the highest we've seen interest rates since 2007 as they continued their quantitative tightening on the market in order to help curb inflation. But this interest rate hike is a little bit different than the ones we've had recently because there's a second part where they say that they are actually going to pause the interest rate hikes and see how the market reacts. So I'll show you guys the clip here real quick if you haven't seen it.
Our policy decision today has two elements. First, we raised our policy interest rate by 25 basis points to 4.5%, and we are continuing quantitative tightening. Second, if economic developments evolve broadly in line with the forecast we published today, we expect to hold the policy rate at its current level while we assess the impact of the cumulative 425 basis point increase in our policy rate.
That's great, right? I know what you're thinking. Oh my God, the interest rate hikes are finally over, but don't get your hopes up because this guy's been known to lie in the past. Check this one out.
If you've got a mortgage or if you're considering to make a major purchase or you're a business and you're considering making an investment, you can be confident that interest rates will be low for a long time. Interest rates will be low for a long time.
Thanks for that one, Tiff. Appreciate it. I don't think any Canadians made any sort of investments based off of what you said 2 years ago. And I think that, you know, when you were saying a very long time, most people were assuming that you meant more than 2 years, considering the average mortgage term is 5 years. But regardless, here we are with the highest interest rates we've seen since 2007. But I will say, you know, his announcement yesterday, he at least smartened up a little bit. And he did say that it is a conditional interest rate pause. I'll put the clip here.
To be clear, this is a conditional pause. It's conditional on economic developments evolving broadly in line with our NPR outlook. If we need to do more to get inflation to the 2% target, we will.
Okay, let's break this down a little bit further. And I'm going to start off by saying I am not an economist. I am a real estate agent, but I think the current state of the market and all these interest rate hikes have, you know, forced everybody to pay a little bit more attention to monetary policy before they make any sort of investments. And I think it's really good to actually watch and understand some of these announcements, especially if you're looking to make a move. So what I've done is I've actually included the full video link down in the description below for anybody who does want to watch it. Basically, what's going on is they're going to pause interest rate hikes because they know that the effects of the interest rate hikes are going to show up in the market, you know, anywhere from 12 to, 24 months down the road. Now, they have been raising rates 8 consecutive times over the last 10 months. And basically, they want to see if the markets are going to react the way that they expect them to. Their goal here is to curb inflation. Okay. It's not to bring houses down. They really just want to cut down on inflation. Right now, we're at about 6.3%, and their target rate is 2%. So they're hoping that all these interest rate hikes have, kind of got people to tighten up with their funds a little bit, not invest as much, not go out and eat as much, not spend as much, and that will bring inflation back down to 2%. They do have to be very careful that they don't raise rates too much because they may overshoot it, and then inflation could go the other way where we're actually under 2%, and then at that point, they would have to start lowering rates again and start to stimulate the economy. So it's this fine line that they're trying to balance. So how long will they pause rates for? We don't know exactly. If things are going according to plan and they stay on target, they're hoping to get inflation down to about 3% by the end of the year and get it down to 2% in 2024. But if inflation doesn't react the way that they would like it to, whether it's because they haven't raised rates enough or whether it's the outside factors that affect inflation like rising energy costs, they are prepared to continue to increase rates. At the end of the day, when the government has to choose between inflation and a recession, they are going to take a recession every single time. What does this mean for you? Whether you're looking to buy, whether you're looking to sell, or whether you're just paying down your mortgage? Well, 0.25% increase is about an extra $15 per month on every $100,000 loan you have. So if you have a $500,000 loan, you're looking at another $75 a month. And I don't think that that's going to make too big a difference in the market. The big thing here is them saying that they're going to pause rates and how much that's going to play into the psyche of the people who are looking to buy. I know I can speak for myself and for a lot of realtors that I've spoken with. The pipelines are full. Buyers are ready to go and they want to buy, but everybody is playing the wait and see game. We all want to see what happens with the interest rates. And I feel like I sound like a broken record at this point because I feel like I say this every video. But if you're looking to get into the market, just make sure you have a long-term plan, minimum 5 years to just protect you from any market fluctuations. And I'm telling all my buyers right now, go get pre-approved, understand your budgeting. Let's figure out what you're looking for. And if the opportunity comes up to get the perfect home for you and we can get a good deal on it, now is as good a time as ever to buy. As for sellers, I know that I've got a lot of move-up buyers right now. So people who are basically selling their condos that are down anywhere from 10 to 15%, and they're moving into, larger homes that may be down 20 to 25%. So they're able to pick up 10 points on the market there. And for the other sellers who are just looking to sell, if you can afford to hang on to the property, definitely hang on to it long term. But ultimately that comes down to your monthly numbers. So, what I would say is if you're in that situation, reach out to your real estate agent and, they can take a look at your full scope, your full picture, and then advise appropriately. I hope that helps give you guys some insight as to this announcement, what it means. It looks like we're just going to have to play a little game of wait and see. Would love to hear what you guys think about what's going on in the market right now and what you think is going to happen. Make sure you drop that in the comment section below. As always, thanks for watching, guys. Make sure you like, comment, and subscribe, and we'll see you on the next video.